to get rolling, and we're going to talk about the economic market with Dr. Cruz.
Thank you and good evening. It's a pleasure to be here with you to share some of what's going on in Miami-Dade County's economy. I promise to be brief, and for an economist that's a very big challenge, but I'm going to try to I'm going to cover basically 3 points I'd like to do. Is talk a little bit about current conditions, where we are today, a little bit about what are the growth factors or the sources of growth for 2010, and a little bit about what's sort of out there potentially as a threat to economic recovery in 2010. The good news, I think, is that Miami-Dade County is coming out of the recession as the national economy is coming out of the recession. You know, last third quarter GDP growth was positive at 2.2% national GDP growth, even with employment levels declining. And the only way you can have that, of course, is if you've got an increase in productivity. Well, in Dade County, we've seen payroll employment on a seasonally adjusted basis, basically bottoming out in May and June of this year. And since that time, we're sort of up and down, but we've essentially stabilized. And of course, what that means is with productivity growth in the third quarter, we probably increased our GDP as well as the national level. And that's probably, of course, carrying over into the fourth quarter of this year. So, and that's at the top level, as a sort of a top indicator, that's very good for us. That's quite positive for us, because we think that coming into 2010, we're, especially at the second half of the year, that we're going to see some growth, actual growth in those employment numbers. The end to the layoffs is particularly important because it helps to repair consumer confidence. And that, of course, helps to support consumer spending. At the national level, we know that consumer debt is shrinking. And coming out of a recession, that is a good thing. That bodes well for the future, because that means consumers have the ability to, they've pared down some of their debt, they have the ability now, as things get better, to employment stabilizes and consumer confidence returns, to spend some more. And that, of course, is very important. The third quarter of U.S. GDP, at the national level, third quarter growth for consumer spending was about 2.8%, and that's pretty good. We're happy to see the consumers doing their part for the economic recovery. Locally, taxable sales are still lower than they were last year, but on a year-over-year basis, that level of decline has stabilized, and in fact, there's been a sharp reduction in the rate of decline in taxable sales. And that, again, and even in the last number that we have for October, consumer spending on non-durable goods, taxable non-durable goods, was a positive 1.1%. That on a year-over-year basis, that's pretty strong. So that's a good indicator for us. And although Michael is going to talk more about the residential side, I'll just say that another positive factor for us is that even though prices of existing homes, the typical existing home, are lower at relatively low levels or comparatively low levels, prices have begun to stabilize. And that's good when you take into consideration that the number of sales, of residential sales, both in the condo and single-family home markets, has been increasing quite dramatically. We're now on a month-to-month basis compared to, we're at the same levels of like late 2006. Significantly higher than what we saw at the peak of the drop in housing prices. So it appears that housing prices have begun to stabilize, and that also, I think, bodes well for increasing the pace of sales of units into the future. Our international trade volume, which international trade is very important for Miami-Dade County and for this region as a whole, the airport and seaport are still, of course, below, trade is still below last year's level, but in the last 2 months we've seen again an increase, a growth in international trade. And again, that's a key important sector for us, and so that also is a positive sign. And tourism indicators, they are starting to show some growth and some positive, or as they say, green shoots as well. Even though room rates remain still very low, the number of rooms sold in the last few months, in the last 2 months of data that we have, has increased. The sort of not so good news on the tourism side is that cruise passengers are still way below last year. Now, as we look forward into 2010, the most important source of growth in the near term for us, for the local economy, of course, is the growth of the U.S. economy. Right? That's, you know, we're a very open economy, and we depend extremely on what's happening at the national level. But that economic growth that is anticipated to occur in 2010, that national economic growth is going to help many local industries, and particularly it's going to help domestic tourism. Strong growth in our major international trading partners is also something that's likely to be very important looking forward in terms of stimulating local economic growth. Brazil, our largest trading partner, has weathered the global recession very well, and there are clear signs of growth in Brazil, and that's pretty important for us, not only on the trade side, but also on the tourism side. Rising oil prices could help Venezuela's economy, and that's important for us in terms of trade, but of course Venezuela is still an economy that has serious challenges. But on the export and import side, we think that there's some positive growth momentum there for us. And U.S. economic recovery is already showing up in higher imports, and that's important also because we not only export things from here, but we also import quite a bit as well. And so the trade volume we anticipate is going to be one of the factors that will help our local economy. International tourism should also get a boost, not only from economic growth in our major tourism markets, but also from a relatively cheap dollar. And public sector construction. We're not too optimistic about the private sector construction side, but on the public sector construction, we have significant public sector projects in the works. Part of that has been financed with federal stimulus dollars, but at the county level, we have our own, what's called the Building Better Communities Bond program, which is funding a lot of infrastructure projects, and that's going to be something that will boost or help support the construction side. But still, we don't expect too much growth in the construction side. But given where we've been, a stabilization and some growth is positive news. But we're not completely out of the woods yet, no, not by any long shot. There's potentially a new wave of residential foreclosures out there, and we still haven't solved that problem. That's a potential threat to prices, and of course, another decline in prices or another trend in declining prices will not be good for sales and real estate activity. State and local government budgets are very tight again this year. In fact, revenue declines are anticipated for state and local budgets in the coming year, and that of course means most likely means lower levels of government service and lower levels of employment in the public sector side, and we're already seeing that. And finally, you've probably heard that there's a potential, or there may be some potential for a sudden spike in inflation in late 2010 and into 2011, and that spike in inflation could raise interest rates very significantly. I really don't see that as a high probability at all. I just don't think that there's a lot of excess capacity. There's no indication that we're running into some bottlenecks that are going to raise cost of production. So I really don't think that that is a likely scenario. And that, briefly, that's just the sort of overview of where we are and where potentially we're headed into 2010.
Thank you, Dr. Cruz.